You hear about investors buying a property investment only to find that they have to put their hands in the pockets all the time for additional money for maintenance and other expenses. And they're complaining about little growth and investment returns. When looking at purchasing new commercial property investors, like all other investors, are looking for a bargain. We all love a bargain. We want to get something below market value and make a profit. It's something we can add value to and improve the return over time. It is more than a coincidence that experienced property investors continue to get higher than average returns from their commercial real estate investments. They may appear simple on the surface, but it involves a lot of experience, property knowledge, and research. Like any successful business, commercial property investment revolves around increasing income while at the same time reducing costs. It's about identifying the highest and best use for a property and positioning it effectively in the marketplace. The question is, how do you do it? Are they just lucky or isn't? It's a careful blend of seasoned property knowledge and research. I have been in the property business, commercial property investments for over 35 years. During this time, I've had the opportunity to work with successful property investors and developers. This includes times of high and low economic situations. More importantly, I've seen what has worked and what hasn't. Whether you're a seasoned investor looking to revitalize an existing property or a newcomer eager to explore the world of real estate investing, this video is intended to give you the 17 ways that I have found to increase commercial property value. And obviously other ones, these are the main ones. So here we go. And by the way, I cover a lot of these cases I mentioned in this video in my book, Commercial Real Estate Investment for the Real Estate Investor, which I've linked in this video below. First thing is, can the property be developed? That's probably the first question. Is you look at the condition of the property and what's the general condition. You look at the zoning, you look what's around, what's happening in the area, the demographics of the area, how's the area changing, what the demand seems to be. Is it conversions from industrial to residential? Is it from commercial to retail? Has there been a current rezoning in the area? Check with the council. The council's got records. Is there a planned rezoning of the area? Check it out. You may have an increased height limit in the area for buildings. So you may have a 2-story building there, and you might find that you can develop it into 6 levels. This presents a substantial opportunity for you to develop that property, if that's the type of investor you are. Can you increase the rent? Now, a lot of investors seem to buy properties, keep them a period of time, and let things just ride. Don't worry about increasing the rents on a regular basis. Don't watch the current market, see whether the rents are increasing or how much or whatever's happening. And they find that the rents seem to be below market value. They're happy to keep their existing tenants there. Tenants are happy, they're getting a below market rent, and the landlord has got continuous occupancy of the property. But the property, check the current market prices for the rent. Are you charging far less than the market value? Is there an opportunity to increase the rents in the property? So analyze existing lease agreements, including CPI increases or inflation increases, percentage increases, or market rate adjustments. For new leases, research current market conditions and comparable property rents. How can you increase long-term commercial leases? Longer leases provide more stability and generally increase the value of the property. And if you're in a situation down the track where you want to sell, investors like long-term tenants, if that's the sort of investor they are. When you're negotiating with your prospective tenants, highlight the benefits of stability and cost savings for both parties. One of the ways that property owners use is incentives. So to encourage someone to take a long lease, you may have to give, depending on the length of the lease and the economy at the time, you may have a 3-month free period or a 6-month free period or 3 months free, then 3 months half rent. Or maybe you may offer to pay some money to upgrade the property for the current use, maybe a new latest equipment or an extra bathroom or a more attractive outdoor area, a new kitchen or something to please the new tenant, to encourage them to take up a longer lease. You may be able to make the existing area bigger. Maybe there's an outdoor space you can extend to cover, make it more attractive. Or maybe it's like a restaurant situation or cafe situation. You may have more outdoor seating, make it more attractive for their customers to sit outside, converting an area which is underutilized, your storeroom into an office area. How can you utilize extra space? Are you allowed to increase the size of the existing area? Look at all the possibilities to increase areas. Obviously, the more area you got, the more area you can lease, and the more income you get. Improving the building's overall appeal. How can you make it more attractive? Refurbishment. Sometimes just a coat of paint might work. You may refurbish the foyer. You may improve the garden area, the outdoor area, the ambience, make it more prestigious, appeal, better lighting, signage. All these little things should be looked at to improve the overall appeal. People like to work. Attractive building, pleasant to work in, and they also attract more clientele and be congruent with a business use of that individual tenant. So look at ways how you can improve the building's overall appeal. How can you improve the commercial tenant amenities? Things are changing all the time and things become outdated very quickly. You don't want to be known to being old-fashioned beyond the times. Things like NBN, which is now getting older, energy efficient, air conditioning systems, better security, electric car charging units. The technology changes all the time. Keep up with technology. People want to have the latest facilities available. If you seem to be backward, you won't attract the best tenants. Things are becoming more sophisticated these days. As we're getting more technologically advanced, you've got to keep up with the times. The other amenities, maybe improve a new bathroom, maybe a gym, maybe an eating area, separate area. But before you do anything, I remember one of my bosses when I was early in my career was a property manager, commercial, overseas, international property company. I had ideas of how to improve the amenities. And the first question that my boss used to tell me, does it make us more money? So if you're looking at improvement, think about, does it make you more rent or more money, better return before you do it? There's no use in having this whiz bangs new stuff if it's not producing a higher income. So talk to the right people, do your research, ensure that what you're doing actually improves your bottom line. How can you improve security in the building? Now, security is very important for everyone, especially in these times at the moment. So look at ways of improving security, make it look more secure. New tenants looking at premises and look at how safe it is from theft and other situations where they could be exposed. So go through the whole system. You need more alarms, better doorways, corridors, or anything else, lock systems or some sort of security systems. Look at all the possibilities. Maybe get someone to have a look at the place, some security company, and see what you can do to improve security, make the tenants more safe and secure. Continuing on with security, we've got fire systems. This is very important. Look at your fire system. Make sure they comply, because if something happens, big trouble. That's a fact. How can you improve it? Make it more safe. It goes along with the safety features. Have a fire expert in your property. Look at ways of minimizing exposure to fire situations. Look at ways of increasing the lease length of existing tenancies. So maybe if you've got short leases, a couple of short leases, negotiate with tenants. Look at how they're going. Have a talk to them. Are they looking at expanding in the future? Is there something missing from the property? Are you up to date with all your technology in the building, facilities in the building? Maybe sit down and talk to them. If you take an extra 3 or 5 year lease, we'll help you with this or with that. If you don't ask, you don't get. A lot of times I've seen it happen is that tenants have been on short leases and there's been something that's bothering them. The facilities, the toilets aren't quite right. The kitchen's not right. The place not being maintained properly. It's getting tired or whatever reason may be. And they just leave without even telling you what they've left. And if you get in early, you have a talk to them, ask them, what's the current situation? How you're going? Would you get an idea what they need? And if you satisfy that need, it's basically doing a cost analysis. If you spend X amount of dollars and you get X plus this amount of rent, it's worth your while. Losing tenants costs you money because the cost of finding a new tenant and the vacancy factor, etc. Look at what your existing tenancy is at the moment and see what you can do with those. Look at ways of attracting high-paying tenants. If the area is changing, are you seeing a shift in the quality of tenants around? Maybe you get there's a booming industry in the area. And so look at ways maybe you have to increase some of the facilities or improve some of the facilities to attract a high-paying tenant. What do you have to do? Again, do analysis, the cost-benefit factor, and see what you can do to improve it. How can you minimize operating expenses? This is the easiest way to increase revenue. Good property management and maintenance contracts are essential. Depending on the cost-benefit situation, implement smart technology and create an eco-friendly property where possible to optimize resource utilization, reduce energy consumption, maintenance costs, other operating expenses. Have a policy of continually searching for better and cheaper alternatives with utilities. Go through the bills all the time. Prices change all the time. Check the bills out. How can you save money? Is there a better deal somewhere else? Building insurance. A lot of insurance policies are very complicated, which makes the job of comparing policies very difficult. Some building owners think that their cover is an easy money save. For example, your building is worth, say, $10 million. Your policies comes up to $10 million. Then you think, I want to reduce that substantially. Can we insure our building for $5 million? Which is a cost saving in itself. The problem is, if there's a situation where part of your building is damaged by fire or whatever reason, and the damage is, say, $100,000, you may find that you're only able to claim $50,000 because your insurance policy is 50% of the building value. So be very careful. Insurance companies are fantastic at collecting money. Paying money out is another problem. How can you improve the building structure? How you handle this depends on the current condition of the building, the type of tenants you have, the length of the leases, and the current zoning. Building landlords should address structural issues like roof leaks and plumbing problems immediately. Water is a major problem in buildings. They cause a lot of problems, a lot of damage, and leaving them as they are could be very expensive down the track. So it's a good idea to keep the property in tip-top condition all the time. If unsure, consider hiring an engineer to confirm that the structure is sound. Tenants are more demanding these days. It's a turn-off to look at the building to see cracks, water stains, water leaks, and other evidence of poor maintenance. Many building owners have the attitude of patching up problems as they occur. This is, in some ways, fair enough if they've got short leases and they're looking at redeveloping the property on the track. But still, you've got a responsibility as an owner to maintain it, the property, as good as possible and to make it as attractive as possible for the tenants and their clients. Again, I go through my experience of the last 35 years. I have found it's best to act upon these problems as soon as you find out. And as I mentioned before, they can be very expensive down the track. Can you get more tax benefits from the property? This is something you can discuss with your accountant. But I always encourage my owners. I'm amazed when I see property owners not getting the full tax deductions benefits from the property investments. I would suggest you consider a specialist quantity surveyor to review your building equipment to ensure your book values are accurate. Depreciation is a benefit. It is an income situation, so it looks better for the value of your property, and you're saving tax, so it's costing you less money as well too. I'm amazed how many times I've looked at properties which have undervalued the depreciable assets. So think about hiring a quantity surveyor and discuss this with your accountant to ensure you're getting the full taxation benefits from your property. How can I avoid property vacancies? Now, I'm amazed at how many property owners don't really think of have an overall policy regarding their leases. Now, you've got leases all over the place. You've got 3-year leases, you've got 5-year leases, you've got 2-year leases, you've got month-to-month let tenancies, etc. And all of a sudden, a new tenant comes in, a nice tenant who wants a long lease. You give them a 5-by-5-year lease. So basically, you're left, you can't do anything with the property if it's possible development site, redevelopment site down the track, because that tenancy is there for 10 years. And in the meantime, tenants are leaving and you can't do anything until that 10th year unless you negotiate with them. A lot of owners I've seen, with their encouragement of their lawyers, have decided to insert demolition clause in their leases. This seems like a simple process. In my experience, it's very difficult to get the maximum rent out of a tenant when you've got a demolition clause, because the tenant knows in the demolition clause they've got 2 years to go or 1 year to go before it's activated, even though they've got a 5-year lease. That's all the time they've got. So they'd rather go somewhere else where they can stay, got a guaranteed lease and stay longer. Generally, I've seen, in my experience, about 50% of the rent you probably lose by having a demolition clause in it. Be very careful how you insert demolition clauses. I would suggest discussing with your property consultant coach along with your lawyer. Work out a way which you, maybe some compensation if they need to leave early. Make it worthwhile for them so that they can pay a top rent, and you've got the option of vacating the property and everyone's adequately compensated for it. You don't have a situation where you've got a new rezoning, which means you've got an extra 5 levels on top, and you may lose on selling the property at a substantial capital gain because there's a couple of tenants still there refusing to leave because they've got long leases. Work with your property consultant, coach, specialist who understands the whole area. Have a business plan. Owning a commercial property is like owning a business. Have a business plan for your commercial property. Plan out, what do you want to do in the next 2, 5, 10 years? See what's happening in the area. Have a plan to see how you can increase the value of the property down the track. Don't think short term. A lot of building owners like to think, oh, we're going to keep this for a long time. But that's not always the case. Things happen. Be ready for it. Good planning is essential. Another policy of improving value is acquiring the neighbours. This might seem ridiculous, but you'd be surprised over a 3, 5, 10-year period, the opportunity comes to increase your portfolio by buying your neighbours. You're better off buying your next door neighbour than buying something in another suburb, another city, in most cases. You've got more negotiated powers with the local council for redevelopments. If you've got a larger block of land, you've got more options. So if you're getting the same return next door as you are in another city, now, depending on all the factors, you're better off buying next door. Have it ready. So you may find that you might get more levels, more high floor space ratio, credits from the council. You may have more options for larger commercial buildings. It's cheaper, economies of scale to develop things like underpinning for car parks, that sort of thing. There are costs to take into account when developing a property. Even if you don't want to develop it, then attract. When it comes to sell, generally you've got a more attractive proposition when it's a larger property. When I look at a property working for clients, I look at what ways can we get more income. Look at other property income sources, things like telephone towers. I've used vacant areas for film sets, building. Look at ways you increase your income. What other income sources are in the property? Look at opportunities are there. You should also take into account the effects they will have on other tenancies. So they consider those factors. Possibly leasing advertising space above building. One of the things I've used outdoor track. If you've got a good location, heavy traffic, outdoor advertising space. Nothing is telephone towers. I've been in touch with movie producers and directors for movie sets and commercials. Buildings got unique characters in it. Producers are always looking for unique properties for their type of movies they're making, TV series or commercials. Another one is pop-up shops, especially it comes in busy periods like Christmas shopping. If you've got a vacant property, retail property around the Christmas time, for 2-3 months, so say from October till December, whatever it may be, lease it out for a pop-up shop or somewhere where, other times of year, there are companies out there want to get rid of excess stock. So you're getting a rent for 3 months and the property's vacant. Employing an effective property management system. Managing property can be very complex. Consider hiring a specialist commercial property manager or a property management company. They will look everything after you, from day-to-day items like leasing to property maintenance and possible capital works down the track. Invest in an effective property management system to streamline operations and reporting. Above all, ensure that there is always effective communication with tenants and quick issue resolution to stop matters from getting out of hand. You don't want to get a reputation of being a bad owner. Word gets around. Tenants talk to each other. They can see things. They see problems when they go to your property. They look at what else you may own or you may be shown. What work you're doing. You're doing nothing. They don't want to have the frustration of working with a property owner that doesn't look after them. Generally, you look after them, they'll look after you. In conclusion, commercial property investment is not just a financial endeavor. It's dynamic and ever-evolving business. In the commercial property industry, I've witnessed firsthand the strategies that consistently yield high returns and increase property values. Remember that successful commercial property investors treat their properties like business. You are running a business. That includes knowledge, innovation, and a proactive approach to successfully navigate the commercial real estate market. Address the critical questions and implementing the strategies discussed in this video to enhance the property's appeal, boost your cash flow, and reduce costs. Every decision from attracting long-term tenants to modernizing the amenities and minimizing expenses should align with your long-term goals. Moreover, keep an eye on growth opportunities, whether acquiring neighboring properties or exploring additional income sources. Your commercial property investment journey should be testament to continuous learning and adaptability. Enhance the challenges and opportunities that come your way. And remember that success in this field is not solely luck. It's about informed decisions and strategy actions. As you embark on or continue your journey as a commercial real estate investor, remember that the path to success is paved with careful planning, diligent execution, and a commitment to treating your investment with the seriousness it deserves. With determination and the right strategies, you can maximize returns, grow your property portfolio, and ultimately become a highly successful commercial real estate investor. I'd like to hear comments. What do you think? How are you looking at improving your value? What do you look when buying a commercial property? And subscribe to this channel.